All right, good morning, everyone. Thank you for joining us in this beautiful November day, right after daylight savings. Thank you all for coming and participating in today's hot topic session. It is our appraiser panel, and I want to thank everyone that signed up. This is our largest sign up in terms of our hot topic sessions all year. So I'm really glad to see that, and thank you all for joining. I do want to point out that our next hot topic session won't be until January, and those sessions throughout the spring will revolve around ADA reasonable accommodations, broadband in Delaware, and the Housing Choice Voucher Program, Section 8. So those sessions will be coming up in the spring. Take a look out for them. We'll be advertising them at the start of the new year, but we are taking a break in December. So again, as I said, today's hot topic session is on appraising. And I did ask Phil McGinnis a few months ago to put this session together, and I'm so glad it came together for all of you today. I'm not going to do any intros. I'm going to actually throw it right over to Phil. So Phil, go ahead and take it from there. Thank you.
Thanks, Wes, very much. I want to welcome everybody. Thank you for your interest and your passion, and I guess to some extent your compassion. We've been fortunate to assemble quite a crowd today of panelists. I'm reading the bios, and I think between us, we got about 140 years collectively of experience. I don't know whether that makes us smart. It certainly makes us older. But we're going to let each of the panelists introduce themselves. Lynn Baker from Kent County, Steve Houston from Sussex County, and Jim Mullen from Newcastle County. And Lynn, why don't you go ahead and introduce yourself?
Good morning, everyone. I'm Lynn Baker, and I've been the owner and operator of Baker Appraisal Services for over 30 years now. I work primarily on residential appraisals in Kent County, Delaware. And in addition to appraising, I've also been a broker for over 30 years. So kind of get to see it from both sides. I was a member of the Appraisal Council, which is the regulatory board for the state of Delaware, for 6 years, and served as chairperson and vice chair. And we'll move on to the next individual.
Steve Houston.
Good morning, everyone. I'm Steve Houston. I'm located in Western Sussex County. I service all of Sussex County, do some appraisal work in Wycomico and Worcester a little bit, but primarily all of Sussex County. Certified appraiser since 1991. My mother and father were real estate appraisers and also real estate agents. I'm also an active real estate agent with Callaway, Farnell, and Moore in Seaford. Like Lynn, I also served on the Delaware Council of Real Estate Appraisers from 2005 through 2011. Hold the SRA designation of the Appraisal Institute. And my practice is more litigation support these days for attorneys. I do a lot of estate work, and actually my niche is divorce work, property separation work. Do increasingly less bank work. Like I say, more private assignments at this point. So that's me in a nutshell.
So Steve, like me, you are an SOB?
Somewhat.
Son of broker?
Son of broker, absolutely.
There you go. Jim?
Good morning, everyone. I'm Jim Mullen. I'm self-employed in the Wilmington area. I've been appraising since 1988. I worked with my mother in appraising. I received my SRA designation through the Appraisal Institute in 1996. I predominantly work in the Newcastle County market. And if anybody's familiar with Newcastle County, you can jump over the border into southern Delaware County, southern Chester County, or maybe Cecil County. I do go as far as the Smyrna market. I do residential property, 2 to 4 family, and residential land in terms of maybe a building lot or small parcel. My work is split between employee relocation work, although if anybody familiar with the Wilmington market knows, most of our major companies have kind of transferred out. I do some bank work, I do some attorney work, and then, folks call out of the blue and need an appraisal for an estate or something for private use.
Okay, beautiful. So we have some hot topics that we have devised ourselves that we think you are interested in or should be interested in anyway. But if something does come up, if you have a question or whatever, you can use your chat to me directly. We will try to fit some question and answer time at the end, but like most of these things, we try to get way more than 60 minutes of quality time so we don't end up short. But having said that, fellas, let's go straight to the hot topic, the COVID, the pandemic pandemonium. So I'm guessing that since April of 2020 and all the way to January of this year, COVID restrictions were probably our biggest obstacle to turning reports out. Do you agree with that? And what kind of obstacles do you see these days? And you guys can just jump in and take it as you see it.
What I'm seeing traditionally is the timing is short and the deadlines are short and it's a rush. And I'm sure as a lot of people know, they were bank approved or financing was approved, but the COVID held them back. And then once as things began to open up, they were ready to move on their property or the property they were going to purchase, and in the purchase market in particular. So that's what I've seen. It's just, I'll call it a short fuse. You just had to get this thing turned around and into underwriting as soon as possible.
Yeah, well, did you see the short timing even during the pandemic? When everybody was shut down, you couldn't even get into houses to do inspections and whatnot.
That was a little bit I saw was a lot of the banks and lenders had pivoted to the exterior only inspection, and then you could talk to the property owner directly or maybe the listing agent if it was a sale. And naturally, thank God, agents put those pictures in the bright MLS, and that was a lifesaver to give you a flavor of the interior, of the property.
Right. Go ahead, Lynn.
I was just going to say, my volume never really dropped off, even during the height of COVID. I'd say the first 2 or 3 weeks, like everybody, I kind of stopped doing interior inspections. And then, as Jim said, some of the banks pivoted to these, I won't call them hybrids, but they were exterior only with interviews with the owners. One of the biggest problems I see now is just the sheer volume of work, and the rising values are a definite issue in the market.
Right. Steve?
Yeah, I think, looking back in retrospect at everything now, I think at the beginning of the pandemic, nobody knew what the effect on the market was going to be. And I think the assumption was it was going to be negative. But obviously, it's been the exact opposite of that. And especially in Sussex, Eastern Sussex, the influx of the New Jersey, the New York buyers, the out-of-state buyers from the north just flooding in, leading to the multiple offers, the offers way above list price, what I call the feeding frenzy. And then, combine that with the other factors we have. I think there's a shift in wealth going on. The baby boomers are starting to die off. There's a big shift of wealth transfer. Since the pandemic, a lot of the younger workers have realized they can work remotely, which again has fueled the second home market in the resort market area. And then obviously the historically low mortgage interest rates. And I think all of those factors are really continue to push the market, and still with the limited inventory conditions that we have, I don't know how long this is going to continue, but I think there are a lot of factors impacting the market other than just one or two presently. But as far as any interruption in service, I have not had any interruption in service. Was wearing a mask for inspection and gloves a little bit before vaccination. Didn't touch anything on the interior of homes, doorknobs, anything like that. And only had a couple requests to do exterior only inspections. So no, I would say from the caseload and inspection side, minimal to no impact.
Right now, you guys do predominantly residential work, right?
Yes.
Yes.
Yeah, and I'm going to guess that 99% of the audience is probably residential. So I can chime in from the non-residential side if somebody has a question or a comment. But I guess we're sort of seeing the same thing from the non-residential side. Is everybody's got a short fuse. Everybody wants closings in a hurry. It's sort of reminding me of back in the 2003, 4, 5, 2006 boom, the real estate bubble, when deals were closing in 30 days with financing commitments and all that kind of stuff. So it's been a wild ride. So I guess we sort of addressed it, but let's enunciate it. Are you experiencing rising levels of volume? Or are you seeing the assignments sort of level off lately? Or when do you expect volumes to level off?
I've noticed that the refinance market has leveled off when the rates really dropped when the pandemic came along. I mean, that was way up there. The purchase market still stayed just as busy, but I found in the Newcastle County market that the refinance market is kind of leveled off, but the purchase market is still very strong. I noticed in my world it leveled off maybe about 2 weeks ago, but just this past week it got busy again. So it's going to be strong here, in my opinion, for a little while longer.
I haven't seen any drop off in Kent County, either in refinances or purchases. It seems like I have personally never turned down as much work as I'm turning down now. There are just a lot of people that want appraisals, and I guess everybody is very busy. And of course, as we were saying, everybody wants it quick, and I'm at a point where I can't do anything quick. So if people are willing to wait, I do the work. If not, I just have to decline it.
Right. Steve, you seeing the same thing?
I'm seeing something a little different. I think I was talking to one of the top agents over in the Bethany area last month. We were working on a property I was appraising for an estate, and she was listing it to sell. And I feel like a couple weeks before Labor Day, things started to get a little quiet. And I was having the discussion with her, and she said, yeah, back in the beginning, late spring, early summer, a good property would come on the market and we would have 5 or 6 good offers, many over list price, very few contingencies. She said, but now, we get 1 or 2 instead of 5 or 6 offers right out of the gate. So I do feel like it's slowed a little. A lot of that market can be seasonal. So I don't know. I'm sure a lot of people would disagree with me, of course, because we still have the very low inventory levels. And I think good properties that are competitively priced are still going to sell quickly. But I do feel like it's not so much of a feeding frenzy now as it was back in the spring and early summer.
And yes, I mean, even from the commercial side, there's so much work out there, we can't do it all. And most of our lenders are offering us, give us a regular bid and give us a rush bid. And okay, well, a rush bid presumes a higher fee, the convenience fee. But even the rush bid, I mean, there's only so much work you can do. And I'm sensing that we definitely have a shortage of, there's something in the chat, Wes. Is there a question about the government accusing appraisers of racial bias? Okay, we're going to try to get to that stuff a little bit later, so bear with us. I'll review the questions as we move through. So what are you guys experiencing in assignment results? Are we seeing higher or lower values? Are we meeting contract prices? I mean, how about premium price values, things of that nature?
I'm seeing overall higher values, meeting contract prices. Well, Sometimes we meet the contract price. Sometimes when, as Steve was saying, we have an influx of buyers from New York and New Jersey, also here in Kent County, and they're willing to bid 20 or 25,000 higher than the list price. And just because they're willing to do that doesn't necessarily make the property worth that amount of money. So sometimes, you know, the contract price is just a little higher than the market will bear. So I would say, you know, it goes both ways. Sometimes they work, sometimes they don't. And I think buyers have to be aware that the property may not appraise if they're bidding well over what a competitive list price is.
Okay. You other guys?
I haven't had the occasion to, I haven't had an assignment where I had to appraise a property that was where the sale price was grossly over the terminal list price. But I have had the occasion to do a couple where the final sales price was maybe 5,000 over the terminal list. And I think it's a matter of doing some very good inventory analysis. In other words, I'll give you a case in point, the townhouse and condo market in Lewis, very, very challenged as far as inventory. And when you have a listing that's been on the market for 4 days and you've got multiple offers, you know, if you can bracket the sale price, even if it's a little over the terminal list, I think you really have to look at what the inventory is for a specific type of housing. You know, nobody's that good. Nobody's that good. And real estate's an imperfect market. So in the case where like I say, the sale price is a little over the terminal list, I haven't had any issues. But there again, I think with a lot of these properties where the final sale price is a lot higher than the terminal list, these people aren't going for financing. They're paying cash, or they're only financing a small amount, a quarter of the sale price, maybe a half. So it's not even getting to the point of an appraisal because they're paying cash. Now, in a year or two, when they decide to refinance that property, what's the result going to be? We don't know. We don't know what the market's going to hold. So it's going to be interesting to see.
Right.
What I've seen in particular is with this assignments is there's enough market data for paired sales analysis for if it's a purchase, you know, there's enough data to pick from or comparables to use in an appraisal on a purchase. One of the things I've seen, which I'm very grateful for, is when I engage agents, is they're very good at understanding you can't let this thing run away, as I call it, in terms of these bidding wars. And some of them I've talked to, you know, hey, I had to cut this off at X. And I think that their experience and maybe just listening to their heart, so to speak, is they just know if this thing just keeps going higher and higher, we're just not going to get there for a final purchase price. So I do credit the agents with being very market savvy, understanding what's going on in their market, especially in Newcastle County, of knowing when to say, hey, enough is enough. But I have seen these values in particular, you know, they're holding strong because there's enough market data and sales out there to consider in an appraisal for a mortgage, especially for a sale.
Okay. So prices are all over in continuing that line of thought, prices are all over the place here. When was the last time you've seen prices acting like they are today?
I would say the mid 2000s, you know,
Real
to your
estate bubble.
point. Yeah, really, when all that credit default swap business was going on. That was the last time.
I definitely
I don't see
agree
this
with that.
crashing like that. I don't see that happening.
I was just going to say, I definitely agree with that. 2005, 2006, shortage of inventory, a lot of influx of buyers. But I think the underlying principles are quite a bit different now than they were then. So we're hoping that we don't have a bubble and the market doesn't crash. Maybe there'll be a little correction, but that's not necessarily a bad thing.
Even the stock market corrects, right, Steve?
That's correct.
Yeah, and I think back in 2005, 2006, what we saw were steadily increasing values. I don't remember seeing the kind of bidding wars that we have now. And there again, talking to another agent in the Lewis area that sells a lot of property, she said, so many of these, they're not, as far as the stability of banking in the financial system, people are paying cash for these properties. There's a lot of skin in the game, as opposed to back in 2005, 2006, when they were just leveraged to the hilt. Nobody had any skin in the game. Well, now if we do get to a downturn again, I think the people that pay cash are just going to sit back and ride it out, as opposed to having this foreclosure condition like we had before. So I think it's different. I think it's much different than it was back in 2005, 2006. The other thing too is, I'm very bullish on Sussex County. I think our population in the county is going to continue to grow. I think it's a very attractive place, probably one of the most attractive places in the mid-Atlantic to live. So I think we're going to see, a steadily increasing population, which obviously leads to demand. So, I guess in the short term, I'm optimistic.
So we don't expect to see a bubble in foreclosure activities coming up.
I don't see
The
it.
near term, far term, medium, whatever.
The one thing I've seen, Phil, I can tell you, I saw a lot of investors buy properties in, say, 2012, 2011, 2013, really when the market was bottoming out. Investors paying cash for these foreclosed properties, fixing them up and renting them for the past 10 years. Right. Now, a lot of these properties have come back on the market. They're not renting them any longer, and they're really selling them for peak values, in my opinion. And there's a lot of money being made on those properties that were bought in foreclosure back in that time frame.
Right. Yeah, and I have a property management segment in my company, and I sense that taking a hit because I see a lot of my owners are selling, and they're not selling to investors, they're selling to occupants. So of course we're a little off topic in moving in that direction, but a lot of tenants are going to be struggling to find housing coming up as occupants are sort of taking over the market there. Okay, how about what do you see in the value of substitution residential homes?
Well, I think it's a double-edged sword out there right now. It's obviously a seller's market, and sellers can get more money than they maybe had ever dreamed of for the properties. But as a primary residence, what are they going to replace it with? And can they get the same value for the money that they're getting for their house, or will supply and demand force them to get less than what they're actually looking for the same price? So it really is a double-edged sword on the substitution principle, I think, personally.
You're right. The premium you command is somebody else's premium on the rebound. So
that's correct.
Jim?
What I've seen really in that is the folks are really looking at one particular area. They don't mind a distance from where they kind of would like to settle or purchase. That if they're really looking at, say, a ranch home or a two-story colonial, and they can't find it in that immediate market they want, if they're a little bit of willing to maybe, I call it travel across town or a little further away just to meet that expectation, because of that taste and preference, you know. As everybody knows, and maybe on here from the Newcastle County market, that ranch home market in North Wilmington, I mean, you know, everybody wants one and there isn't a whole lot out there. So, you know, just use that as an example, you know.
Right, exactly. And Steve, I guess if you're doing private stuff, estate stuff and whatnot,
Well,
you find it
yeah,
for
I mean,
sales?
back in, like I say, back in 2005, 2006, I think everybody got a little carried away. You know, wow, I can sell my house for a premium. And so we saw a lot of people selling properties for premium, but then if they had to purchase back in, if they had to buy back in, they were also buying back in at a high point. And obviously that's the case now with the estates. You know, if you're selling mom and dad's house they've had since 1950, you sell the house, you take the money and you walk away. But if you're, you know, trying to buy back in, yeah, you're buying back in at a high level as well. One of the things I have been seeing with the empty nesters, the people who have kids off in college now and they're selling their houses and trying to downsize. And we always used to say, well, you can buy more than you can build. But obviously with the construction costs the way they are now, that's not the case. So I see them selling the bigger houses and building a smaller house that was probably costing more than what they made on selling the big house. So, you know, I don't know where this ends, but to me that's kind of interesting. You know, we're back to paying more for less. So
Right. So are you guys seeing most of your assignments are coming in resales, or are you seeing a lot of new construction? And how do you read the market on the new construction? Are we keeping up a little, or is new construction lagging behind at the moment?
What I've seen in the Middletown market in particular, because in Newcastle County, I mean, and Townsend for that matter, you know, with the new construction market is, you know, the lots are already pretty much sold. They just haven't started to break ground yet. So when you go in there, it's a little tough because you'll have a contract at X, but any sales right in that community are at Y. So you got to kind of, again, look around the peripheral. We use that term value of substitution. Okay, if I couldn't buy in this community, what's most similar in the Middletown market that a typical buyer would consider? And the good thing is if they're working with an agent, it's the first question I ask an agent: did you tour, especially if they're from out of the area, did you tour them in any other communities around the Middletown market or Townsend market in particular? Gives me personally a flavor of what their taste and preference was. And that helps. And especially in an appraisal, then you can, you know, I always like to make the statement is, you know, this was the value of substitution. They're going to buy in this community, but they also looked in X, Y, and Z here, which is also new construction, which offers the same type of style, taste, and amenities within the community. So that's what I've run into.
And Jim, you don't do much brokerage, but Lynn, do you get a chance to do any brokerage?
Yes, absolutely.
Okay. So, and Steve, you do some brokerage too?
I do.
Okay, beautiful. So what do you see your buyer expectations in regard to current market conditions?
Well, you know, in the beach market area, the new construction is still, you know, just chugging right along. Some of these new Shell Brothers community over in the Long Neck area, it's, you know, they're going up as fast as they can possibly go up. So
as fast as that is,
you know, it's still very strong demand for new construction, whether it's single family detached or in townhouses. it's, yeah, very strong buyer demand for new construction. Absolutely. In all areas of the county. I do see some people who purchase lots who are dealing with sticker shock now as far as the cost to construct, and have gotten back on the fence, waiting until or anticipating that construction costs will come down. I don't know whether that's going to happen in the near term with the demand. And historically, I've never seen construction prices go down. So I don't know how that's going to shake out as far as construction costs.
Right. Lynn?
In Kent County, I see the demand very strong, both for new construction and resales. New construction, there is enough supply, but as Steve said, the prices of construction have gone up so much, you're obviously paying a lot more for a little bit less. The supply and demand issues are affecting the market in Kent County because we still are getting multiple offers on most properties. So if it's something that a buyer really wants, I don't personally do it, but from the appraisal side, I see contracts that specifically have a clause in them that states if the property appraises for less than X, let's say 10 or 15,000 lower than the contract price, the buyer is still willing to move forward with the contract. That's how, I won't say desperate, but how anxious buyers are to get into properties right now.
Right, and to take that a step further, because I don't dabble too much in the residential market, it's against my religion, but I have heard situations where there are automatic increases in prices. So if you make your offer and somebody else beats your offer, then your contract automatically bumps.
That would be called the dreaded escalator clause.
The escalator, when does it end? That's the part I can't get. Is there an end price, an end
You
date?
can set a limit on it, Phil.
Okay.
Like say it's a $300,000 house, you have to inform your agent that you're willing to go to 320, basically.
Okay.
Increments of 1,000 or whatever the case may be.
The death of 1,000 cuts. We'll go $1,000 a time, 20 times if we have to. I love that. And we're hoping that the values are going to catch up to those escalators, right?
That's the hope.
And are we seeing anybody kick out that you're aware of? Are you watching contracts kick out because of escalator clauses that can't match the appraised value?
Most of the people that I see with escalator clauses have enough additional cash to make up the difference. And they want the property under any circumstance, and they're willing to put up that 15 or 20,000 if they have to, that they can't get financed.
Okay. Steve, you seeing the same thing?
I'm seeing that as well. Not an issue. They can make up the difference because they want the property. There's no inventory. There's nothing else available. You've got a townhouse community with 40 plus properties and you have one listing. So yeah, there's no issue with putting more cash in the deal to get the property.
Right. And Jim, you don't do any brokerage, but are you hearing back end things on reports that you're submitting on things?
With regard to the present conversation, I've seen a couple sales agreements that said that the buyer is willing to cover the difference between the purchase price and the appraised value if it didn't appraise, or were willing to bring monies to the settlement table.
Are there limits on that? I mean, can you?
Well, fortunately, I haven't had an issue like that. Like our earlier discussion is, the sales data that's out there for paired sales for a particular home. I mean, there's enough to look at to consider, which is nice. And I think it's a credit again to the agents knowing when to say, okay, look, we've had 22 offers on this property. We're at X. I think this is a good time to cut it off, you know, and I credit those with that experience and just listening to their gut and their heart to know that, you know, we just can't keep going on this. It's nice to think about, but at the end of the day, we don't get the end result.
Right. Right. Okay. All right. Well, let's talk about appraisal management companies for a minute. I love those things. And usually there's an adjective that fits somewhere in. You never just hear appraisal management company. You hear adjective appraisal management company or appraisal adjective management company. So what effect do AMCs have on not only your business, but the appraisal process?
When everything switched with Dodd-Frank to the appraisal management companies and an appraiser couldn't have a direct contact with a specific lender, and I don't deal with AMCs anymore, just because what I'm going to kind of share here was, number one, the turnaround time expectation of within 3 days or 4 days or 5 days. In today's society, it's going to take at least a day to contact the listing agent, who then may have to talk to the seller to see what's good if we don't have a lockbox. The second thing I didn't like is when you send it in as an appraiser, whoever is reviewing this, they send it back. It's got a list of questions that are relevant to the appraisal process itself, of how you got there, tell me how you got there and why. And then my other experience is when they pulled comparable sales and they would submit them to you. Well, that's not, in my opinion, the job of the reviewer, because us as appraisers, the appraisers on here and maybe some of the folks listening, the 3 covenants that an appraiser has to follow is we have to be independent, impartial, and objective. Well, how can I do that if an appraisal management company is giving me additional sales to consider in an appraisal that, in our opinion, aren't even comparable to the subject, and they don't even work in the market? And in closing, I've had a couple over time tell me, well, where I practice, we adjust X. Well, you're not in our market. You haven't talked to anybody in our market. So after that, I choose not to deal with those. And that was a business decision moving forward.
Anybody else?
I made the same business decision that Jim did, probably a lot longer before Jim did, and I probably talked Jim into making his decision. He'll probably tell you that's true. Yeah, just unrealistic expectations. Sussex County, I'm located on the west side of the county, in a rural location. Probably 80% of my assignments are east of 113 beach area. It's an hour over, an hour back for me to do an inspection. And then when we're getting comparable photos, it's an hour back, you know, 2 hours of drive time each way. So I've got about 4 hours of drive time for each appraisal in that location. And, you know, these short turn time expectations, they just don't work, especially when you're dealing with somebody that's got a second home at the beach. Typically they're, you know, even during the season, they're only there on the weekends. And of course they want you to come at, say, 4 o'clock on Friday afternoon. Well, navigating Route 1 between Rehoboth and 5 Points on a Friday afternoon in the summer, we all know how that works. So, yeah, I would say the expectations were unrealistic, to the point where it would start to affect the quality of the work. So I made that business decision to not seek many of those assignments, and I feel a lot better for doing so.
Hey, Lynn.
Well, unlike Stephen and Jim, I still do deal with appraisal management companies, but much like clients and other situations, you just have to fire the bad ones. They're not all bad. There's a few decent ones out there. And I have gotten to the point where most of the companies I work with are pretty much like regular bank assignments. You give them what you can meet as a due date, and if they're willing to accept it, then you take the assignment. If they're not willing to accept it, you just move on and say, you know, you can give it to somebody else at this point. I don't accept any of those quickie, we need it in 3 days and we need it for $150 and all that good stuff. I basically give them my conditions, and if they're willing to accept those conditions, then we do work for them. Much like Steve, I also do a lot of litigation, divorce, those type jobs. So that shows you the other side where you don't have to deal with a management company, and you can actually just do a real appraisal based on regular parameters. You don't have to fit a lot of things into the box, so to speak.
Right, right. Yeah, and I'm seeing in the commercial market, some of the local banks, community banks are still doing their own assignments, but we're seeing some regional banks moving to AMCs for compliance reasons. You know, it's not like we need it in 3 days, although I do get what's your rush time and fee. But a lot of the regional banks are letting AMCs manage their appraisal process so that the right number of bids and, you know, all the correct information gets compiled and all that kind of stuff.
Plausible
Okay.
deniability.
Well, I sense that somebody's hiding from somebody somewhere. I guess we have to figure out how to blacklist email addresses and block caller phone numbers somehow, and then we don't have to deal with them.
Right.
And so let's, what are you finding most of your assignments in your market, or are they lenders sending you out of market?
Mine are mostly in market, and since, you know, the four of us here are all appraisers, we know that USPAP matrix of geographic competency. So for an example, in Newcastle County, I'm not going to Philadelphia. I'm not, you know, traveling outside of a market that I don't work in, because I don't know the nuances of the market. And you stay close to home, you deal with the agents and the market that you're in, you understand the nuances of it. I think it makes you a better professional overall. I mean, granted, where I'm located, I can jump over into southern Delaware County, southern Chester County, or Cecil County for that matter. But what I found in that kind of peripheral is it's just a spillover of the market. If you drive out Route 52 in the morning out of Wilmington to go look at something in Chadds Ford, Pennsylvania, for an example, the steady stream of cars coming down 52 to work in Wilmington, you know, they just they just jump over the state boundary, you know,
right,
as an example.
Right.
I work a very tight market, Kent County only. As Jim said, you know, the nuances of your market. You know, if somebody wants to send me to, let's say, Wilmington, well, I would have no idea what, you know, what one brownstone versus 3 streets over, if there's a difference. So I stay with what I know. Now, I do get assignment requests for all counties and the 3 surrounding states. People just don't get it through their heads that, hey, I work Kent County, Delaware, and that's it. So there are people trying to assign cases in states where I'm not even licensed. So I don't know what to say about that, other than people are definitely looking for appraisers in this very busy market.
Right, right. Steve, your assignments are probably a little more targeted, specialized.
I like to stay predominantly in Sussex County, and majority of my work is in the resort market area: Lewis, Rehoboth, Bethany Beach, Fenwick Island. I do some work in Ocean City, Maryland. I do some condos in Ocean City, Maryland. I feel comfortable with that. It's such a large county that there's always plenty of work. But it's a unique county in that the western side of the county, value-wise, is completely different from the east side of the county. And the concept of geographic competence is huge. When I was on the council, many of the complaints arose from appraisers not knowing the market well enough that they're working in, and it constantly changes. I like to know the agents I can talk to. There's Lewis agents I can talk to. There's Bethany agents, Rehoboth agents. Whenever I need a gut check, I'm never shy about picking up the phone and talking to the agents about the current market conditions. And I think that's so important for appraisers to do. And I would just, as an agent myself, I would encourage agents to never be shy about calling an appraiser if they have a question. I love to talk to other real estate agents about real estate, and I'll talk to anybody, anytime. If you have a question, give me a call. And I learn so much every time I talk to an agent, and I appreciate the callbacks. But I think communication is key. I think it makes our profession so much stronger, and I'm just a big proponent of communication all the time.
Right. Yeah, well, that geographic competency thing is great. From Dodd-Frank, we had a lot of, from the commercial non-residential market, we had a lot of Philly and Jersey appraisers coming into Kent County doing our non-residential assignments, and I was getting a plethora of bid requests for properties in Sussex and Newcastle County, and they were talking about being unrelated, unbiased, and so they were looking for out-of-market appraisers who didn't know lenders and who didn't know brokers and whatnot, buyers and sellers, and trying to keep an arm's length conspiracy, I guess. All right, good. So how about reviews? Are you finding your reports being reviewed, and are they being reviewed more closely or less closely, or?
Mine, what I've dealt with is, and I'll just share this short example, is I do work for a bank whose corporate headquarters are in Winston-Salem, North Carolina. And the review lady called me. She was actually an appraiser, an MAI in the Appraisal Institute. She wanted more photos in the appraisal, not of the subject, but of the peripheral around the subject. So she said, look, I'm in an office tower in downtown Winston-Salem. I know nothing about this neighborhood and the peripheral around the neighborhood. I said, fair enough. So now I've started to take photographs. When you pull into the community, you've got the entrance, the sign with all the flowers around it and the lights. So I'll take a picture of that. And just as an example, if anybody's familiar with the Pike Creek area, Limestone Road, Route 7, I was doing an appraisal in Limestone Hills or Mendenhall Village, and I mentioned recreation is within a half-mile, Carousel Park. When I'm driving up, I'll pull over and I'll take a picture of the entrance of Carousel Park. And what I found is they're sitting there and they're just looking at the photographs and the text, but they need more photographs, I think, to give them, the term she used was, I need a level of comfort to understand what's going on in your market. So, again, if the Pike Creek Shopping Center's there, I'll take a picture of that sign. So with this lady in particular, just sitting in that office tower in North Carolina, I wanted to paint a picture of what Pike Creek was all about, with the shopping, recreation, and the community. And the same thing with the little community space in there with the basketball courts and the playground. I take a picture of that regardless of what community it is. And I think it just gives them a comfort level that they have an understanding of, okay, what attracted this buyer to this home in this market and why. So that was the best lesson I ever learned. It was a couple years ago, and I love it. And she also told me, she goes, don't limit yourself to 3 or 4 comps. If you got a couple more, give me a couple more. Show me a listing in the community. Give me a pending sale of a like property. Just paint me a good picture with some science to it. And that was the best advice I ever got.
So you got to dispense some geographic competency for the reviewer.
Yes.
I mean,
And
that's the
she
bottom
joked
line.
around. She said, if you do this for me, you'll never hear from me again.
How about you other guys?
Well, I think with the advent of technology, our reports are being reviewed. Let's say not manually. There's a lot of computer programs that look at these things, and then when they spit out a problem, then you get a real reviewer. And once in a blue moon, I get to actually speak with a reviewer and, explain what they may be looking for or what may have been missed or whatever the case may be. And of course, I'm on the other side a lot. I do a fair amount of reviews. So I don't think it's any more or any less. I think reports are being reviewed as well they should be in this crazy market that we're in, because some people may or may not be doing what they're supposed to be doing as appraisers. It's as simple as that, I would say.
Gasp. We don't want to think about that. Steve, how about you? You get any reviews?
I haven't had any review issues lately because I do increasingly less bank work, but I do work for two local Delaware banks, probably two of the largest. And I think it's a matter of just providing the discourse, writing 2 or 3 paragraphs, adding commentary in regard to current market conditions, what's going on, what's inventory levels for the segment that you're working in. It's a matter of explaining in a clear and concise way so that they understand exactly what's impacting the property that you're appraising. I think if you give them that discourse, you're going to deal with less questions. Obviously, there's always maybe a technical issue. You miss a box, or just a minor technical issue,
Right.
which can be easily changed. But I think it's a matter of clearly communicating what's impacting the market, especially from the inventory side, which
Right.
is so critical. But I think if you give them that information, they can read it, and hopefully that leaves them feeling comfortable explaining why you ended up where you ended up or didn't end up. But no, I haven't had any issues with reviewers, nothing major over the past year.
Okay. Are you guys keeping up with the conversation about desktop appraisals and ABMs and that kind of stuff, especially from government agencies, HUD and whatnot?
I think Jim's done a lot of that. I think, Jim, you've done some desktop stuff, haven't you?
Restricted use in terms of, for one of the local banks, just trying to keep an eye on value. You don't actually inspect the property. But if you've got one in the neighborhood, you pull it up. You look at the days on market, the median sale price is kind of what they were kind of after, and it's kind of a check, and just, okay, look, what is X neighborhood or community, what's going on in there,
Right.
But I haven't done anything formal like that. I've been following it, but it just seems like they don't know how they want to dressage this thing for what the rollout's going to be, I don't know if they'll ever get there.
What's that? I think what they're always looking for is cheaper and faster. So they think this bifurcated appraisal with having a real estate agent go out and get the pertinent facts of the property, taking photos, getting the physical characteristics, and then passing that along to an appraiser to determine what the value is going to be quicker and more efficient. I'm just not a proponent of that as an appraiser. I think an appraiser needs to do the complete job to really know what's going on in that market and to be able to see the physical characteristics and literally touch them, as opposed to taking someone else's information and making a subjective decision based on that. But that's just my opinion. I could be wrong, obviously.
Yeah, the RPR tool for the realtors, the Realtor Property Resource, is a great tool, but they use a lot of AVMs, and I question a lot of those values that come out of the AVM. So there's nothing like having a sharp pencil and a guy on the street or woman, whatever, an appraiser on the street doing the real work. All right, we've got just a few minutes, and so let's see real quickly, is there a difference between doing a refi and doing a purchase mortgage appraisal?
Not in my mind. You should always be determining what the fair market value of the property is, regardless of the situation.
Right.
Same methodology into the appraisal process. How's that go again in 101? An appraisal is an appraisal. It's an appraisal. It's just a matter how you report it to the client or the end user.
Right.
So,
right.
No difference.
Same thing.
Same thing, no difference.
How about new construction price escalators? Have you had any experience with those things kicking in?
I had one time, and I just share this, and we've all been there. You complete the appraisal, it's on the vacant lot, and they're at X. And then a couple months later, the value has gone from X to Y because they've either added extras or now with the pricing increase. And as an appraiser, you got to basically redo the thing all over again because of that. So welcome to our world. You put it away and it comes back and, hey, they've added $54,000 worth of extras or lumber prices. So, if you're at X and now you're X plus 54,000, you gotta basically redo a new report.
Right. Do you get a fee bump for that?
Most are kind, put it that way.
Okay. You guys seeing the same thing?
Yeah, I mean, that's something that, like Jim said, there's always additions to contracts, and it's kind of irritating on our side because you have to revisit it. And a lot of times, we call that free work, basically. But I have seen in the last 2 months, when lumber was going up, I saw a couple of new construction contracts that specifically addressed if the cost of lumber rises more than 5%, your contract will rise accordingly.
Right.
So builders are putting it in their new construction contracts currently, in some cases.
Okay. All right. Well, I see we're at the end. Wes, do we have time for one more?
Yeah, go right ahead.
Okay, this one I love. I mean, we've gotten a lot of questions and I can't get them all in the allotted time, and we'll figure out a way to get some of the questions addressed offline. But this one I got to give it to you. What can agents do to help appraisers?
Communicate.
In 30 seconds or less.
Communicate. When I'm doing an appraisal for one agent in particular, in the beach market, she always provides me with the comparables they use to price the property. I think that's very helpful. If I'm acting as a listing agent, I also do that for my sales. I provide the appraiser the comparables I pulled, what I use to price the property, copy of the plat mat, tax record. I always measure the house, the sketch. I give them as much information to help them. Not that they might, they don't have to use it all, but at least they'll know what I looked at, how I priced the property. And the same thing when the agents provide me with their information. I might not use every comparable, but I'm going to absolutely review it and look at it and give it consideration.
Right. Good.
I would say almost to Steve's point is they share their broker's price opinion, the comparables they considered. You wouldn't know how many little packets I've gotten. And just a general interest. Is there anything I can do to help you? And they open that door. And for me professionally, I love it to death. And same thing, if there's a problem, please call me. I'm dealing on a difficult one now, and I asked the young lady if she'd be kind enough to share her broker's price opinion with me, just to see, what she used. But I just think sharing their data. And the other thing I do, just so you know, is I incorporate some of that information that the agents share in my report. As an example, I'm working on one right now. It was on the market 5 days. It had 22 offers. So it goes back to that other issue of, according to the listing agent, there were 22 offers on the subject property. There was quite a demand for it. So it gives them that level of comfort, so I kind of share what the agent shares with me. I stitch it into the document, the appraisal. Again, it gives, I think, the reviewer and the reader of the report that comfort, that, hey, this is a sought after property. And the fact that I did the due diligence with the agent and the agent did the due diligence with the appraiser.
Right.
It kind of shows we're all kind of working in harmony together. And I think that goes a long way, and I'm appreciative of it. Seriously, I am. And everybody on the call, thank you.
Okay, Lynn?
I agree with everything that Steve and Jim said. Communication, data, anything you've used, all the updates that the home has had, whether it be roofs or kitchens or baths or electrical, I want to know everything that's been done to the home, because it does have an effect on value in one way or another.
And to Lynn's point, because you have to tell a story about the subject. Do you know what I mean? And I think that's how this kind of operates, is we've all got to tell that story from a marketing standpoint from the agent, and then the appraiser in terms of the valuation process. I mean, that's kind of what I'm getting out of this today. And I'm grateful.
Yeah, I would just ask the agents to give us as much as you can, because we're going to use some of it and we're going to incorporate a lot of it into the appraisal report to justify whatever the value may be for that property.
You mean information, not grief.
No, I mean information.
Right.
Grief is free. We get plenty of that, but.
All right, well, we're going to let that be the last word, but I will make this offer. Wes, you're there?
Yep.
I see probably a need to redo this at some point in the next few months. What do you guys think? We're going to see some market shake up here, I guess, in the next 3, 4, 5 months, 6 months. Do you think we should reschedule in 6 months or 7 months?
About a spring market. We're going to go into the winter months. We'll come out into spring, and then, once the tulips and daffodils are starting to come up, I'd be curious to hear from the, if we can kind of do another, maybe do the questions. I mean, we've gone an hour, but I'd like to get some questions from the agents or hear their feedback.
That's what I was going to say. I mean, the market's going to change, I think. It's going to evolve. Well, it constantly evolves, but I think it's going to change reasonably drastically in the spring. And Wes, what we can do is reach out and get questions in advance and tailor the presentation more towards what's on people's minds, more so than what's on ours.
Yeah, definitely. We had quite a few questions come through. Thank you for everyone who sent them in, but we are out of time. I want to thank the 4 of you. Thank you, Phil. Thank you, Lynn. Thank you, Steve. Thank you, Jim. Very, very much appreciated. We had a great audience today. Bunch of comments coming through that this was excellent and everyone appreciates it. So I'm going to conclude and wrap it up here. Again, thank you all to the 4 of you, and thank you to everyone who joined us. And we'll be doing these again starting in January, and we'll look at doing something related to this in the spring like we just talked about.
Beautiful. Thanks, fellas. And
Thanks,
thanks everybody
everyone.
out there in Cyberland. Good luck. Happy hunting.